Hey guys, this is Alex from MarketWise Asia, and in this video, just want to share with you my thoughts on the market and also share with you on the VVIX over VIX ratio and how it could give you a clue on how the market might move potentially. Okay, so let's get started over here. So if you have been watching my Facebook Live, on Friday last week, okay, I mentioned about the indices, talk about the S&P, the Dow, and also the small cap. So let's go through over them. So implementing my usual template over here, let's put this. Okay, let's put in the cloud and also the CPR. That's just to make sure. Okay, to put too many things over here, you add in the small cap. Okay, the Russell 2000. This is the Russell 2000. So last Friday, I actually mentioned that right now the indices, especially the small cap, there's a potential for risk on and also a very strong support over here. Can you see that price actually hit the horizontal flat cloud support over here. So as I mentioned during that time, okay, horizontal support on the cloud is actually very strong support. So I'm watching that. So right now it is still holding pretty well, and looking at the S&P 500, okay, price seems to be doing a flat pattern over here, and then yesterday there was a breakout over here. Okay, all right, and for the Nasdaq, okay, it is the weaker among the three indices, okay, for comparing between the Dow Jones, the S&P, and the this Nasdaq over here. So again, it is also kind of forming a flat pattern over here. All right, so as I mentioned, okay, last Friday I said that there could potentially be a squeeze. Okay, squeeze meaning that price could continue to head higher. And I understand that I mentioned that the breadth is at a high already. It is not at the highest. So there's a one subscriber who asked me, hey Alex, market is at a breadth. Okay, how can the market continue to go higher? So I just told him that it is at a high, but not at the extreme higher. And personally, I feel that the market can out to squeeze the best some more. Meaning that because too many people are too bearish already. It is so bearish that I am bullish short term, okay, at least until the end of December. So that's the reason I told him that I think the market could be heading higher. And actually looking at the data over here, all right, so I also shared this in the Telegram channel over here. All right, so this is from our Carson Investment Research over here. So historical data, right, it shows that towards the end of November, late November, stocks tend to rally. So we are approaching the end of November this week, and heading into Thanksgiving, okay, it tends to rally. And coupled with the fact that this year 2022 is a midterm election, and it is even more bullish. Of course, this is based on historical data seasonals. We still have to look at the price action to confirm, okay, whether there will be a rally or not. Okay, so far I think the price action, it is looking good. Okay, and all right, of course, heading into the Thanksgiving week, trading volume might be a bit lower, liquidity might be a bit lower, okay, but nevertheless, okay, the price action itself still seems pretty okay for now. So personally, okay, I feel that until the end of November, all right, I think the market might have some room to continue to go higher a little bit more. Okay, of course, I could be wrong. Okay, so this is not an investment advice or trading advice. Please do your own due diligence. I could be wrong, right? So please don't follow my advice that seriously. Okay, all right. And looking at the VVIX ratio, okay, it also does give me a clue that how the market might move. Okay, so personally, okay, all right, for those who don't know, right, VVIX, okay, ratio is like this. Okay, VVIX ratio. Okay, I'm talking about the VVIX over VIX ratio. I repeat, VVIX over VIX ratio. So for those who don't know, I actually have a template over here, right, at the bottom over here on my trading view over here. Okay, so this is just a VVIX over VIX. All right, so if you are new to TradingView or new to MarketWise Asia, I sometimes do talk about the VVIX ratio. So it is actually very simple, right? You just search on the ticker over here, right? Just key in VVIX, all right? You can see that this is the CBOE VIX Volatility Index, right? Okay, all right. And then you just slash VIX, okay? And then you get a VVIX ratio. So this is just a very simple formula, the VVIX over VIX ratio. All right, so I have to give credit to Bini. She's the one who taught me about, she mentioned about this VVIX over VIX ratio. Okay, so and also she has been one of the regular speakers at the Market Insights Virtual Summit. So credit goes to her. So yeah, so okay, talking about that, right? Let's head into that. So for those who don't know what it is, actually a VVIX over VIX ratio. Okay, so for those who don't know, okay, VIX, I believe most people should know. So VIX is using the IV, the implied volatility of the options in the S&P 500, and the VVIX, okay, is using the IV of the out of the money put options in the VIX itself. So VVIX is also known as the volatility of the volatility, so the VIX of VIX. Okay, so this is just a very quick overview over here. So in short, okay, for those who still don't know, not to worry. Okay, you can just treat it like a very overbought or oversold level. So just use the line chart we'll do over here. So remove all the other lines over here. Okay, so all right, so you can see that when it is at the top, you can see that market is at a complacent level over here. At the bottom, okay, market is at a fear level. It's very similar to VIX. Okay, so what's the reason why I think that the market it is not as weak as it seems yesterday? All right, so for those who don't know, I think let's go back to the S&P 500 chart. So sorry for jumping around over here. Okay, let's put in the candlestick pattern over here. All right, of course, yesterday was a big move over here. Market, the S&P was up 1.32%, but the day before, right? Today it is the 23rd. Okay, it's 20. Okay, yesterday is 22nd. Okay, 22nd. So on the 21st of November over here, the market was actually down. So the S&P 500 was down about minus 0.4%. And the Nasdaq is actually, down minus 1%, down 1%. Of course, if you look at the market as a whole, actually it is the Amazon, Amazon and Tesla that is dragging the Nasdaq down. Okay, the market is not as weak as it seems actually. Okay, that's another story, another day. So the market was down minus 1%. But if you look at the VVIX ratio over here, right, the VVIX over VIX ratio over here. So while the market, yeah, let's do a comparison over here. Let's do a comparison. Let me add in side by side so easier for you guys to see. Okay, so on the left hand side over here, right, you see it is the VVIX over VIX ratio, and on the right hand side over here, it is the index, the S&P 500. So as I mentioned, right, on this day itself, okay, you can follow a cursor. Both will be in line on the same day. All right, both will be in line on the same day over here. So market is down 0.4%. But the VVIX over here is up massively 2.55%. Okay, not often you can see VVIX is up above 1% or 2% that kind. So on a down day, okay, the VVIX on a down day over here on the 21st, okay, the VVIX is actually up massively up 2.25%. Okay, of course yesterday the market is up massively, the VVIX is also up massively, up about 6% over here. All right, and then for the Nasdaq over here, on the Nasdaq, okay, well, it is down 1%, okay, the VVIX, obviously, it is up, okay, you need to understand that the VIX, okay, it is based on the S&P 500 options, so, but nevertheless, you can have a gauge of the overall market, so there is a kind of a small divergence on a day-to-day basis, on a daily basis, so it does give me a clue. It tells me that, hey, the market is actually not as weak as it seems to be, even though I see on Twitter a lot of those the pros are looking for this is an irrational rally, or influencers saying that this market is irrational and such. So it does tells me that the market is not as weak as it seems. Okay, and coupled with the fact that I mentioned just now, okay, let's go back to my original chart over here. Okay, the small cap, okay, it is hovering at the cloud support over here. All right, can you see that over here? Oops, should be this one. Template. Okay, this one. All right, so it is hovering at a very strong support. Okay, very strong support. Coupled with the fact that the dollar is weak, and as I mentioned in my Facebook Live, for the past year when the dollar is weak, okay, the market, as in when the dollar is strong, the market tends to be weak, so it has a negative correlation with the market. And when the dollar is weak, there's a potential chance that the market might go back up again. So there's a few factors over here. Okay, the weak dollar, the market indices is at a strong support area. Like for the Russell 2000, it is at the cloud support. The S&P also above the cloud, also near the cloud support, also over here, and also coupled with the weak dollar. So that's the reason why I think that potentially the market could rally a bit higher. As I mentioned, okay, this is just a gut feel. I think that there could be a squeeze further. Can still go a little bit higher, okay, until the end of November. This is just my personal view. I could be wrong, okay. So we shall see until the end of November, and we shall see. And again, I think Thursday it is actually Thanksgiving Day, so liquidity is lower, okay, it's lower, and yeah, So be careful on trading itself. Okay, so I hope you guys learned something new from this video. If you learned something new, okay, do like this video on YouTube or subscribe to our YouTube channel, and it means a lot to me also. And if you're watching this on Facebook or whatever it is, okay, do give us a like as well or share the video as well. So thanks so much, and I'll see you again in the next video.